Let's go ahead and
Uh,
let's kick it off. Go ahead and welcome you to the call. I appreciate you coming on, Jeremy. It's a pleasure connecting with you earlier. For everybody that's listening tonight, we're going to be doing this AMA with Revenue Land. They have some key components through their project. Looks like they are launching with the Defiant platform, and have the taxes set at 12%. Going to be focusing on NFT auctions, learning lease. That's going to be one I want to hear more about. And it looks
yep.
like it has a DAO staking component as well. So before we dive into the actual project, Jeremy, how about we learn a little bit more about yourself, maybe, and kind of what background that you came from, what brings us to the call tonight, and in terms of the project and how that's going to look for investors. But I'd love to learn more about, you and yourself, and we can move into the project.
Sure, absolutely. So I'm a docs dev. My name's Jeremy. You can go to MemeCoinMarketplace.com and go under docs devs. You can find me on there. I've been deving in the space now, about 10 months. Feels like less, to be honest with you. I opened my first project back in October of 2021. But my personal experience, guys, I'm a salesman through and through. Like, it's in my blood, and that'll come out tonight on this call. You guys will be able to feel that. I got my very first commission sales job when I was 15 years old. I was selling fingernail polish at a mall kiosk, and I was making $15 an hour as a 15-year-old, which today is like nothing, right? Every 15-year-old makes that if they can like make sandwiches. But we're talking 2002 or so, so kind of a big deal back then. And I was basically in commission sales ever since. I sold cars when I was in college. Coming out of college, I sold business services and business consulting. I still do that, but I also got into business brokering. So I was buying and selling businesses. I take referrals for those two jobs, but my primary job is deving. So like I said, I launched my first project in October of last year. That project is alive and well. We launched it with 7.5 ETH in the pool, got to an all-time high of around 110. Right now it's sitting around 40 ETH. We launched our second project in December. We launched our third project in February, and this will be our fourth project. And what our ecosystem is just about eliminating scams from the altcoin industry, from the ERC20 industry. When we got into doing this, you could go and find 5 launches every single day, and 4 of them were rug pulls, and 1 was a honeypot. And like that's pretty much what it came down to. And you find fewer and fewer scams out in the marketplace, and you find a few more and a few more ecosystems here and there wanting to kind of root out scams and fight that off. And we believe that we kind of spearheaded that initiative. We've certainly got the most in-house tokens of any scam-free ecosystem that's out there, and there are a couple now. So I mean, again, we're excited to be able to inspire other projects and kind of lead that industry. And we feel like each of our projects has been just a little bit kind of either with or ahead of the curve. And with this project, we feel like we're ahead of the curve, and we feel like we're pretty well at the bottom of the market now too. So we're super excited for this launch. Every other token that we've launched, we launched pretty much at an all-time high. ETH was trading at like 3,500 on our fourth token. It dipped a little and then shot up to 4,500 when we launched our second token, and then dipped down to about $2,000, shot up to about $3,000 when we launched our third token. And so we're excited to launch this one at the bottom and see what it looks like when you write a token out for either a horizontal ETH consolidation, like we've seen in the past, or maybe a spike like we've seen in the past. But I believe personally, based on market trends and based on what we've seen, that this project is honestly about 4 years ahead of the curve. And we'll get into kind of why and different things like that. But this particular project is going to be the most heavily community engagement token. It's going to be really kind of have a heavy revenue stream in NFTs in that learn and lease, like you talked about. We're going to be putting something on with learn and lease that you guys have never seen before in DeFi, and so that's pretty exciting. And again, if you're getting into something 4 years ahead of the curve, and you're able to ride that out and get your long-term investments going, we're launching at around a tenth of a penny. There's no reason we can't shoot this thing to $1 when the next big wave comes, whether it's ETH 10K or whether it's Bitcoin 100K. That's going to come. In the past, they've been 4-year cycles. I got 4 years. I don't know about you guys. I've got time. I've got time to run the project and keep my eyes on this. What's great, personally for me, I make enough money outside of crypto to well support my lifestyle, and I get enough referral business that the commissions continue to come in, and I get to dedicate a majority of my time to these projects, to working hand in hand with the project dev, to work with the community and be available in chat, and to make sure that we're able to guarantee against a project disappearing, which we see a lot. Make sure that we're able to guarantee against a rug pull. Make sure that we're able to guarantee against just false promises and shady stuff that happens in the industry. So that's a little bit about me, Taylor. I'll pass it back over to you and kind of let you handle the questioning.
Yeah, no, right on. And I appreciate that. I think you mentioned that you've been a dev in the space now for 10 months, right?
If I'm counting correctly, yeah. So
In
October
counting
to
credit,
now is
yeah.
at
No, I was
8
gonna say it
months.
must feel like probably 10 years in
you know,
crypto
I,
years. But
I got into deving right after I had a baby, and she just turned 13 months old, and it just the time has flown by.
that's good.
So
Congratulations on the kiddo as well, man. It's Father's Day weekend, so I'll give you a happy early Father's Day there. But yeah, just to kind of back up, I appreciate you giving me your background and the group here as well. I guess let's start bottom up, on the project. I want to know kind of step by step what everything is. Really lay it out for us. Understand the taxes. Understand the land, how do you do this land in the metaverse and the leasing, just really expand on
sure.
your core points here, and then after that we can move into the questioning.
Sure. So this project was born out of the idea that you can buy properties in Sandbox and Decentraland and other places and put them on OpenSea and make a good turnaround. And if you had enough ETH, you could probably make a good living doing that. But it wasn't. That's not enough to launch a project on. You can't just launch a project just buying and selling properties on OpenSea. That doesn't make any sense. So we had to figure out a way to turn it into a viable utility that people could connect to. And what we landed on is we landed on 4 different revenue streams. We took a look at this and we said, what are all the different ways that we could make money in the metaverse space? And we put all of that into a token and streamlined it into 4 different revenues. And we call it the Revenue Land Collective. So it's revenue because obviously you make revenue off of the 4 revenue streams. It's land because we're dealing in metaverse properties and metaverse projects specifically. And it's collective because we really can't do this without a community. Our project dev and our team, we can sit on OpenSea and we can look for stuff and we can do quite a bit of things here on the back end. But if we want to be cranking out 100 new NFTs a month into our marketplace, we're going to need community engagement. If we want to do things like Twitter raid to make people aware of a sandbox space that we have for sale right now on OpenSea, it borders Binance. We bought that property for 2 ETH. Our minimum reserve on it is 6 ETH on OpenSea. If somebody bids 6 ETH or higher, then the project will have a 4 ETH profit on that. 2 ETH, the original 2 ETH investment will stay. 50% of the earnings, so which would be another 2 ETH, would stay with the project. And then the remaining 50%, in this case, again, 2 ETH, would get bought back into the token via a reserve buyback wallet. So the token is designed to be deflationary over time through its revenue streams. So if you take a look at the word land, we took this, we made it into an acronym. L is for leasing and learning. So 2 revenue streams right there in the letter L. We currently own a property in Blocktopia. Blocktopia actually pre-leases these out, and I'll get into that in just a second. And then we own a property in Sandbox. And here in the first week, we're planning on buying a property in Decentraland. Well, we already have built for our Decentraland property a 4-story mall. It's a 4-story building, really. And so if somebody came to us and they said, hey, we've got this great NFT project that we're going to launch and we want to have a launch party in Decentraland, then we're able to take our 4-story building, customize it for their particular NFT project, and allow them to have a launch party in Decentraland. Now, we wanted to do that today. We didn't raise enough money in pre-sale to get our Decentraland property. So that's why we think we'll be able to do that with reflections from first few days of trading. So what's cool about Decentraland is that if you're hosting an event and you can get 50 or 60 people into your event, everyone from Decentraland is going to see it. Because when you log into Decentraland, you get to that main port, that main hub that you kind of poured into, it shows a screen that shows the top events going on. And you only need about 50 or 60 people to be one of those top events right now. So that's what we talk about leasing. Now, when we talk about learning, we've got people in the collective leadership, again, Revenue Land Collective. The leadership of the collective, we've got skills. We have a guy who knows Blender in and out and is amazing with Blender. So from the learning side, and again, a revenue stream for community members, is he has agreed, and other community members, other leaders in the community have agreed to put on Blender workshops. Now, for those of you that don't know Blender, Blender is a digital design software that's common with making NFTs. And what we'll be doing is we'll be putting together a series of classes. So let's say it'll be 5 classes in a row. You got class 1, 2, 3, 4, 5. And the first class that you might attend might be called Decentraland Skin Creation. And so you would take Decentraland Skin Creation 1, 2, 3, 4, and 5. The instructor gets paid based on the attendance. So if he's doing a good job and people are making money off the NFTs he's teaching them to make and they're enjoying his class, he's going to get a raise basically every time because they're making money off of each person that's attending that class. That money's, of course, paid in land token, but he's getting paid for each person. So if somebody is in the collective and they say, hey, I'm particularly good at this and I could teach it and people could sell this product after the class is done in your marketplace, they could come on and teach a class as well. They would get paid directly as opposed to having to hold token or anything like that. The way the classes are going to be designed, so again, if we call it Decentraland Skin Creation 1 through 5, it'll be kind of similar to like wine and paint. So my wife loved doing this thing before we had kids and when we could leave the house, and it was called wine and paint. And you show up at 7 p.m. and they've got 27 bottles of wine for the class and some paint, and they walk you through painting like a mountainscape, the ocean and a mountain, sunrise or whatever. And then you leave the class and you're kind of tipsy and a little bit buzzed, and you each have this cool painting that you did, and you had a good time together. And it's date night. It's a good thing to do. And we want to design our classes that way, so that way by the time you get to the 5th class, we're helping you get your NFT minted and for sale in the marketplace. And then you can get paid 70 to 90% residual income for the creation that you made in class. And the only thing that you need to do to attend this class is to hold token. So if you're holding token, then you'll be able to get access to the Zoom link. We thought about holding the classes into Decentraland, but we realized most people are new. They're not going to know how to do that. So Zoom is going to be a little better. Just like you were saying, add one more Zoom meeting to your day. So if you hold token, you'll be able to get access to the Zoom link. You'll be able to attend the class. You'll be able to see a schedule of classes so you can see which ones you can attend. If you miss Decentraland Skin Creation 3, there will be another one that you can catch. So you're not having to wait months or weeks and fall behind. And you, as a community member, as a member of the collective, you're making money 70 to 90% paid in ETH because our in-house currency NFT marketplace is not set up yet. And then the token will get the remaining 10 to 30%. Just depends on how much sales you have. So if you're doing more than $1,000 a month in NFT sales, you would be collecting 80%. If you're doing more than $2,500 a month in NFT sales, then you would be collecting 90%. And all of these are things that, like I said, you came to our class. And again, back over to lease. If you have created this really great NFT and you want to place it up for sale, we can put it for sale for you on a commission basis in our MetaVerse properties. So in our sandbox, in our Decentraland, in some TCG space, again, can't do Blocktopia because they kind of control that, and I'll give that a little bit. But that's Learn and Lease. I'm super, super excited about it because basically everyone involved in Learn and Lease is making money. The instructors getting paid per head. The people joining the class have the opportunity to create something that they can then sell. And even if you don't sell any, you can wear it around Decentraland and show it off. It's going to be pretty cool. So that's the L in land when we talk about revenue land. Before I continue to A, do you want to pop in with any questions? I'll give myself a break.
I'm actually writing them all down in my notes right now, and I know the team is as well. So if you want to keep continuing through,
Sure.
these pillars, I would call them, then that would be great. We can move into Q&A.
Pillars is a great thing to call them. I agree. So A is auctions. We buy a property, we immediately put it up for auction. So our sandbox property, which is bordering Binance, we bought it for 2. It's up for 8. Anybody that bids more than 6, they can have it. Our Blocktopia property that we got whitelisted for, we got into pre-sale. we were able to get it was very, very competitive. They sold out in about 15 minutes. I had to go into like round 6 in order to get ours, which actually saved us some money, so that was pretty cool. We bought that property. I think was around 1.5 ETH. And then I tried to put it up for sale for OpenSea. OpenSea is arguing with my Polygon wallet right now, but that'll go for sale on OpenSea. And our project dev told me to list that one at 15 ETH because there's no Blocktopia properties left, and it doesn't launch until October. So right now we're selling the rumor instead of buying the rumor. We already bought, and now we get to sell on the rumor.
Which I might add is not a bad strategy either sometimes. So
Yeah,
continue.
exactly. So, next thing is we want to get into TCG. One of the guys at DeFi is like a top 3 holder of TCG properties, and he's given us permission to use his property as part of our revenue stream, as part of that lease revenue stream. We'd like to be able to buy up some of those properties and put them up for auction, and all of other metaverses. We're not pigeonholing ourselves to just Ethereum, just Polygon, just one metaverse. We're stretching this. We want to make, if there's money to be made in the metaverse, this token's going to make it. So let's move to N. So N is NFT, and we have our NFT classes. We have an NFT mall, that 4-story building that our project dev designed for Decentraland that'll launch as soon as we have our Decentraland property. You'll be able to go there and list your NFT sale. People will be able to go there and see them, get the link to it. We are building an in-house NFT marketplace where transactions will be able to happen in native token. So we'll be able to get more and more reflections as these native token transactions happen. NFTs can do so many different things for the revenue stream of the token. So we had to give it its own letter, NFT. And then the D for land is DAO. And I'm going to separate DAO into 2 things. I'm going to say token DAO. Okay, so part of the token, the token reflections, the token itself gets 5% reflections on all buys and all sells. And we have paper hands tax the first week that goes to the token. So this is used to invest in different things. What we can do is we can buy a DAO property for $1,000 and stake it for 6 months. And the way the staking works on a lot of these virtual properties is you're getting a 10% or so return every 5 days for the first, and our project dev, Ethan, might be able to correct me if I'm wrong. Ethan, send me a message on the Telegram if I'm wrong, if you can hear me. You stake it 10% every 5 days for like 90 days. And then after 90 days, it goes from 10% to like 100% every 5 days for 30 days. And then you're getting 1,000% every 5 days for 30 days. And ultimately, if you're vested for 6 months, then you're getting something like a 50,000 return. So a long-term investment for the token, we can buy one of these $1,000 properties, stake it, and then earn whatever that native token is or whatever their native return is as the long-term investment for the token. And just like when we do an auction, half will go back for more DAO investments and half will go directly into the token for buybacks. So if we took a $1,000 investment and 6 months from now it turns into 50 grand, you know that 25,000 is going back into the long term and 25,000 is going directly into liquidity. Like I said, I think we're 4 years ahead of the curve here for 2 reasons. Number one, I believe as a dev, we just entered crypto winter, and crypto winters in the past have all lasted about 4 years. If you look at the run of Bitcoin from pennies to dollars and dollars to hundreds of dollars and hundreds of dollars to thousands of dollars and then thousands of dollars to tens of thousands, those all took 4 years. ETH, this would be its 3rd bull run. Its first one rather was in 2016, and then we went to winter in 2017. We had another bull run in 2021. We're going into winter in 2022. So logic would dictate we have a bull run in 2026. This past time around, the bull run was in NFTs, and that's why the Bored Ape went so crazy, and that's why there's so many other different types of NFTs out there, and why NFTs is going to be such a great revenue stream for the token. 4 years from now, it'll be MetaVerse, 100% guaranteed. That's where the billions and billions of dollars of capital are flowing. And when we have our next run to ETH 10K, our token's going to go right along with it. It's going to 10x just from ETH going from 1K to 10K. But on top of that, we have these revenue streams and we have these metaverse investments. And by having our hands in all of the pies, we will certainly find our board ape, right? We'll find our property that we buy for 1 ETH and somebody offers us 250 ETH for it. So that's what I'm most excited about. I don't know about you guys. I have 4 years. I'm looking at my 1-year-old right now. 4 years from now, she'll be starting kindergarten. I'm going to be around, and I would much rather go through a crypto spring with 4 years of practice and investing ahead of time. So,
Yeah, no, absolutely. And I just to kind of echo that, I think that the next Bitcoin halving will obviously, every time we move into that, it starts the bull run is what we call it. But yeah, I mean, you're seeing institutional growth at these levels again, injecting capital, even though people are getting liquidated, but the right people are. It's all about timing and positioning, right? So the right people are positioning in the cryptocurrency markets for that next big run. And yes, if you are paired to ETH and it does run up to 10K 4 years from now, yeah, your projects are doing really well. But yeah, let's segue right into questions. Kind of around just injecting back into the LP, since kind of where we left off, around the DAO. What outside of that DAO would be providing liquidity, injecting back into your liquidity pool?
So all 4 of those revenue streams inject liquidity into the liquidity pool. The
Okay.
part of the DAO that I didn't touch is we actually have a community DAO as well. So the community DAO wallet will hold 20% of the token supply. It'll lock it in though. So the community DAO wallet cannot have token supply sold. It will collect reflections. The top 20 holders will be able to voluntarily go into a private chat room on either Discord or Telegram of their choice and vote on what to do with those reflections from the community DAO wallet. And they can use those tokens to enrich their group of 20 top holders, or they can use those reflections to enrich the token as a whole. So if we have a benevolent group of 20 whales and they say, hey, we've got an ETH worth of reflections, and what we want to do is invest that into Sand token, because that's a metaverse token. And then when Sandbox releases their new season in a couple of 6 or 8 weeks, we think Sand token is going to do really well. So in 6 or 8 weeks, when it doubles or triples, we're going to sell it off, and we'll use some for buybacks, and we'll split some ETH between the group. That would be a benevolent group. So that's just one reason to become a top holder and one reason to hold a little extra. So I just wanted to throw that there. But leasing revenue goes directly into the token 100%. So if we lease it out to an NFT that's going to launch or something like that, it goes in 100%. If we're leasing you space for you to sell your NFT, the token is getting 10 to 30%, depending on how much you're getting. With auctions, it's half of the profit going into the token. With NFTs, again, it's that 10 to 30%. And then with the DAO, just like the auctions, it's half of the profit. And then the community DAO, they can decide to do buybacks on their own. That's for the community.
Got it. Okay. No, and then those were the numbers I was looking for. Thank you for that clarity. And it totally makes sense. And might I add, it is very healthy for your project. So let's talk about the pre-sale real quick. Obviously, you had one. I want to know how much was raised and how many investors so far.
Yeah, sure. So we're going to be airdropping to around 50, less than 60, but around 50 wallets. We raised under 20 ETH in pre-sale. Their options were a quarter ETH or a half ETH. Most people opted for a quarter ETH. If you invested at a quarter ETH, you're going to get 230,000 tokens for your pre-sale investment, which gives you a quarter ETH worth at launch. You don't pay taxes. That was one of the benefits of getting into pre-sale, but you're getting really no advantage either. So if you put in a quarter ETH, you're going to have a quarter ETH worth of token. In this pre-sale, we required our pre-sale participants to vest. We've not done that in any of our previous pre-sales. And what we saw on our third token launch was we had about 40 pre-sale people hit 2x and dump. And we had about, I want to say, 180 or so people in that pre-sale. 40 of them 2x and dumped on the first day. After a little bit of forensics, we went and found out that about 30 wallets were owned by about 6 people. And so we put terms and conditions in place and some staking in place to weed out the group of people who want to do 2x and dump. And that's why a majority of people are brand new to pre-sale. I think we had, close to 2/3 of the people in our pre-sale were in at a quarter ETH. And the third that was in at a half ETH, those were like repeat pre-sale people who've been in our pre-sales before.
Gotcha.
Some of the ones that are quarter ETH have been in pre-sales before, but most of those are in a half ETH. So
Yeah,
they, real quick, they will get 25% of their supply airdrop tonight before launch. And we're going to launch hopefully sometime within the next hour, shortly after the AMA. They'll get an airdrop every 2 weeks of 25% of their supply plus whatever reflections that supply earns. And yeah, after 6 weeks, they'll have their total supply.
Gotcha. Okay, very cool. And good for you for identifying, through your past launch what you needed to fix there. A lot of people wouldn't do that. So it's glad to hear that it's vested. And the incentive was to be tax free, and that totally makes sense as nobody can predict taxes these days. But anyways, let's talk a little bit more in depth about that. I noticed that you mentioned that you will have some protection for the folks that would be buying in with the fact that you have a higher, I guess, sales tax set for the first week. Can you elaborate just a little more on that and what to
Sure.
expect? Yeah.
Sure. And to complete what I was saying before, we raised less than 20 ETH. So with everybody getting a quarter of their supply dropped to them, that means that there will be less than 5 ETH out there. So even if everybody in pre-sale dumped all their tokens right away, there would still be tokens left in the supply.
Okay.
Not that we're concerned about that, but it's a nice protection to have. One of the things that we've done in the past that's helped keep the chart from dumping right, in those first couple of days, because that can be just detrimental to a project, is what we've referred to as a paper hands tax. And so for the first week of launch, starting with today and persisting for a week, anybody that sells, even if they bought on the open market, will pay what we call a plus 10%. So they'll pay the normal tax of 12%, and the holders will get 6% ETH reflections. They'll pay an additional 10%, which goes directly into the project. So we can buy properties, we can do DAO staking, we can get our classes set up, we can complete our NFT marketplace, et cetera, et cetera, et cetera. So that's going to be 22% total sell tax. That's going to be for a week, the week after launch, starting today, which means that if you buy in for an ETH and you 2x and you cash out at 2 ETH, 0.44 ETH is getting paid out to the project and as reflections.
Okay. Got it. Okay, good. That's what I was looking for. And then how many people are currently on your core team?
Core team right now is about 6 people.
6 people. Okay. And then are those people being airdrop tokens? Are they buying in like everybody else? Or I guess my question is, how does your core team and yourself make money over the project?
Yeah, so actually, that's a terrific question. And our core team makes money off the project mostly through reflections. So we have what we refer to as a vault wallet. A vault wallet holds 50% of the supply, and the reflections that come into that wallet are supportive of the dev team and anything that we need to do, paying to register a website and buying software and paying for the NFT marketplace. And that's all super helpful. That
Uh-huh.
vault wallet will not be earning reflections for the first few days. So
Okay.
those reflections will be going to the holders that are getting in right at launch, and you're going to earn extra reflections, so to speak. And after a couple of days, we'll turn that one on to earn reflections, and that's how the dev team is supported. Being our 4th project, we kind of super know what to expect when it comes to a crypto project, and kind of how to manage funds to make sure that we're not running out.
Mhm.
But most importantly, the dev team, if I can just go into it, one of the members of the dev team made $2.5 million on Shiba and cashed it out at the right time. He's also retired from the sales company that I retired from, so neither he nor I need money from the project in order to keep it going. Our primary objective is to have these projects be the name of the industry on the next bull run 4 years from now. 2 of our other projects devs are college age. I know for sure one of them lives at home with his mom, so they don't have tremendous expenses or kids or anything like that, which is really great. And then the other 2 project devs that we have are paid on an ETH salary, so they
Mhm.
get a set amount of payment every week or every month,
Okay.
kind of regardless of what the project is doing.
Is any of that drawing from the actual taxes? Because when I look at the tokenomics, you have 5% investment, marketing, 6% in ETH reflections, 1% to your launch pad over at Defiant, so 12% taxes in all, other than that sales tax for the first week. So, are the funds being pulled from the investment marketing wallet? Are you getting paid from that ETH Reflections wallet? Just kind of highlight that a little
Yeah.
more for
Like I
myself and
said,
everybody.
the Vault wallet, which holds 50% of the supply, and again doesn't sell, so those are taken out of circulating supply. It does collect reflections, and those reflections are what we use to pay the dev team.
Got it. Okay. That's okay. That answers my question. Very
Yeah.
good. Thank you. I always tend to ask a lot of questions. I can see my team asking me to shut up. I see them in one of the chats here. Just before I do pass the mic and open this up for people to start requesting. So if you do have questions, we're about to move into that time. So if you want to raise a hand or however Twitter works, we'll get you on here so you
And
can ask your questions. Go
let
ahead.
me interject as well by saying that our contract, as well as our methods of operation, have been audited by Driven Security,
Okay.
and our contract itself has been audited again by Safe Solidity.
Very good. Very familiar with Safe Solidity as well. Okay, very good. Thanks for that. So I have like two more questions. The first one would be on the classes that you're offering for holding the native token, right? So is there a certain amount somebody would have to hold to attend that, or is it just kind of any amount in those
We
educational classes, or are they strictly around what exactly?
we haven't set an amount yet, but yes, you will need to have an amount. So it'll work as a Web3. You'll connect into the Web3 app, you'll verify it, and it'll take you and give you a Zoom link and a calendar. So the Zoom link will be whatever the next class is, and then the calendar, you'll be able to see them. So, like, for example, I would go on there and I would teach a class about what is MetaVerse. And I would just
Mhm.
explain to people what Sandbox really is and what Decentraland really is and how to log into them and how to create an account, and like Somnium Space you need a Steam account for. And that's something that I could teach. But I'm not a graphic designer. So we would need our graphic design guy to teach a graphic design class. He's also high level. So our project dev could teach a low level graphic design class. We could teach classes on, like, just as an example, one of the things that we want to be able to do is buy and sell metaverse tokens like Block, Mana, and Sand. We could teach classes on how to chart and TA and watch for this kind of stuff, so the community
Mhm.
can get engaged in that as well. So the classes are all going to be around either understanding the industry better or understanding how to make money off of it better. But we have not set a supply amount. It'll be low. 1,000, 10,000 tokens. It'll be super low. We have
Mhm.
100 million total supply. 20 million are going into the community data wallet, which can't be spent, and 50 million are going into the Vault wallet, which can't be spent.
Gotcha. Okay. Yeah, and the reason why I was asking, it's something that really interests me. I'm all about education. I do all these classes over blockchain and just different stuff that I can get my hands on. So I think that information is key. So giving that ability to some of your holders that want to, I guess, go down the rabbit hole, for lack of better terms, right, and really dive deep, can be a great way not only to bond but build that community more. So props for that, and I'll be looking forward to maybe tuning in one and seeing if I can learn something. And then my last question. So this one is tricky for me. I'm not. So for me, I'm more of a traditional investor in DeFi and crypto in general. So the whole metaverse, the leasing, it's kind of like Chinese to me most of the time. I get it. We have some people on our team that are more, I would say, centric around the NFTs, and they're on the call and we'll have their questions. So just to get to my question is, how do the leases work, and like what does it depend on to always have that income coming in and somebody leasing that land? If it's in Sandbox, Decentraland, what drives that? And is it, I hate to use the word guarantee, but is it always something looking to lease that, or what makes it attractive and what makes that actually come to fruition, I guess, is my
Sure.
question. Yeah.
Yeah, so I'm going to answer your question, and I'm also going to trace back to what you had said about the classes. Now, as an industry expert and a teaching professional already yourself, you could offer to teach a class and say, hey guys, here's what I teach classes on, and here's what I'm good at. And we could throw it on the calendar, share it with our community, and you share it with your community, and they're encouraged to come buy the token so they can attend your class, and we pay you based on the head count. So if your class is good, people would keep coming back, and you could be an instructor. So now, that being said, leasing can work a couple of different ways. As I said, in Decentraland, we're going to have a 4-story building on our plot. If our building is close enough to the road, and that's the idea, then we could sell billboards, just marketing billboards, just like you would see in downtown LA. I live in Orange County, so if I go to LA, there's like a 40-story parking garage, which we have. There's up and down that 40-story parking garage. We can do something like that. We can lease out the entire plot where they can put their own stuff there. It would be again like renting a space at the park, like when we did my baby shower a couple of weeks ago. We rented a little spot at the park, and we got there and we set up our own stuff. And then it also could be to where we set everything up for you, and you just put your NFTs in place, kind of like renting a ballroom. So you rent a ballroom in real life. They set up all the tables and stage and everything, and then you bring your centerpieces and the people. And we would do essentially that. So that is like kind of traditional marketing style leasing. And then the other portion of leasing, again, is allowing you to take your NFT almost like a resale store or a thrift shop or a consignment store where we don't have to buy it from you. We don't have to make an investment. You could put it for sale in our property because we have high traffic and there's people coming and you'll get eyes on it. And if somebody buys it from our marketplace, and we would get a commission from that. Again, just like a consignment store. Yeah, and we're always looking to have that revenue going. So just finish that round that.
Yeah. No, I appreciate it. And it's something that I'm still always doing due diligence around and always trying just to wrap my head around the metaverse and, get involved. I have a lot of friends that, buy land and different things like that. But yeah, at this point, you've answered my questions as of now. I'm sure I'll have like 20 more for you. So I may ping you in DMs. We won't take up, the whole launch night. But at this point, I would like to offer, our core team and our deal flow committee, who's all docs members of the DeFi Angels, to come on and ask any questions that they may have. And then if we do have time after that, we can open up the floor completely for anybody else that may, have a question from there. So at this point, if you do have a question, feel free to make a request here to speak. Looks like Michael Garcia, our president here at the firm, wants to come on first. So I'm going to go ahead and hit the check mark here. Michael, he's connecting.
He's got that ape NFT. I like it.
He is Mr. Ape, is what I call him.
It's a ape reunion. Oh no, so it's a whole thing. Huxley is another whole thing. There's a lot going on with the NFT space right now with some of the transitions happening. But I think David was actually interested in going first, which I don't mind letting him go first, then I can follow up after him.
Okay, I'll hand off. Hi there. Thanks for coming to me. Appreciate your time. I have a few questions. I got a little confused when you were going over the tokenomics because I did read your light paper. I think I'm in the right place, revenueland.io. It sounds like it, yeah.
Yep.
So on the light paper, it adds up to 24%. But
what adds up to 24%?
The tokenomics, 6%.
Yeah, 24% round trip. So it's 12% on a buy, 12% on a sell.
So that's the round trip. Okay.
Right.
That wasn't clear on the light paper. So
okay. I hope our project dev's listening because he put that together. Ethan?
I'm sorry, what were you saying?
I was talking to Ethan. He's listening. He's our project dev. He made the light paper.
Yeah.
Did you have another question?
On the website. That's where the light paper link took me. Yeah, I do. So the 1% to Defiant is that contract as a service or capital as a service?
Contract as a service. They create the collections DApp as well.
Uh-huh. Is that forever 1%?
Yes.
Both ways?
Yes.
Okay. Cool.
That goes for their token.
You're doing great.
Thank you.
I've had too much coffee, so I appreciate you putting up with me. Vietnamese coffee at that.
Oh man, yeah,
so
the good stuff
triple
too.
Espresso, yeah. So
well, I live about 30 minutes from Little Saigon here in Southern California.
Oh, nice.
Yeah.
I used to go to a great place at the foot of Sunset near Philippe's. Are you in LA?
I'm in Orange County, so near Laguna Beach.
Gotcha. I'll tell you about that place offline. It's a secret spot. Anyway, so you say it's a collective, right? But there's leadership. So I don't know what model of a collective you're using, but how transparent does the leadership plan to be on decisions? Like, investing in a DAO, for example? How are you going to
So
manage that?
yeah, so the leadership that we have right now is basically the project devs. And so if we're going to be investing into a DAO and we're using the dev reflections to do that, we'll tell the community what's going on. We may not tell them ahead of time. We might just find the property, buy it, and then say, "Hey guys, check out this cool new property that we bought," because
Right.
it's their property. The property belongs to the collective. It's not
Yes. Okay.
Yeah. So we want to tell you guys at least what's going on, but we may not ask every single time. Now, the DAO, the top 20 holders, that DAO community wallet, they have to be 100% transparent with each other because it's happening on a voting, and I'm the moderator of that room. So I wouldn't allow them to vote to do things that would harm the token, and they're not allowed to vote to sell any of the supply. But if they wanted to vote, for example, to use the ETH reflections in order to get onto an exchange, absolutely. And again, that's something where the rest of the community, the rest of the collective, would find out around the time that they're putting it together. But it would be like any other collective that you would go to. You show up and you're a new member and you haven't contributed much and you don't get a lot of say. You're a top 20 holder, you get more say. You're in leadership, which means that you're instructing classes or helping us find properties or doing something like that. The further along you get, the more say you get.
Right. So you have an internal governance DAO. That's the leadership part.
Yes.
Which is an actual DAO or separate Discord right now.
Well, it's just going to be a separate Discord and Telegram for right now.
Yeah.
That's going to be the simplest way to manage it.
Got you. Because that leads to my next and final question for now. So I appreciate you sticking with me again.
Yep.
Well, I guess as long as it's a Discord, you can't really suffer a governance attack, so that's good. You're talking about high yield DAOs, like 1,000% API. I think most of us who've been around know how most of those, like all the Olympus forks, have gone. Short-term thinking, or there's a loss of confidence, and you end up at the -3 bottom right-hand corner of the game theory matrix, right? Sell. So how are you going to find a high-yield DAO that works?
Well, it's so to be clear, it's not just the high yield ones. The high yield ones are exciting. But like you said, it's almost like rolling the dice, very much like rolling the dice. So
loaded
that's
dice.
Something that our project dev Ethan is much more hands-on with than I am. And Ethan, if you're on, raise your hand or something so you can give us a solid answer to that question and maybe some examples of the DAOs that you've been looking into. Give him just a quick second.
And just so you know, I only ask about high yield APY DAOs because that's what's on the website. In the form of staking for high yield APY, 1,000% plus.
Yep, and those are the exciting ones. Ethan, do we have you on?
Hi, sorry, it was taking me a second because I'm streaming it into the Telegram as well.
Hey, go ahead. So you couldn't hear anything until you said hologram.
Sorry, I'm streaming into the Telegram through this as well, so that's why I wasn't able to talk. And back to the white paper, sorry, we were still working on that. I just had to re-upload the updated part.
So he had a question about the high yield DAOs and how to make sure that we're getting into ones that don't just fall apart.
Yeah, so for the past couple months, we've been looking at a couple different DAOs, mostly on the Avalanche chain. And we've been kind of waiting for them to have a bottoming out. And I'm glad that we waited this long because they took a pretty big hit when ETH fell. But now while AVAX is so low, this would be the time to buy because most of these DAOs, they're inflationary, so they're always going down. The APY needs to be high enough to compete with that. But this should be even more beneficial now because the price is going to take a little curve up when ETH goes back up. But right now, it's been pretty bottomed out the past couple weeks. It's probably at that all-time low. And with the APY so high, even if it drops 50%, we would still be up quite a bit after 90 to 180 days. That's how the compounding works. It's that incentive to hold no matter what the price is.
Right. Well, so what are the internal conditions do you have to meet before you would make the DAO investment? Like, how much do you need to have brought in, just to keep it simple? Is there a trigger? Is there,
You just mean like how much do you have to invest into it?
Yeah, I mean, do you guys have a target before then you'll go out and pull the trigger on a DAO investment?
Right now, we haven't really set that time, so we're going to be using some of this paper hands tax to actually use that money to toward the DAOs. But we're trying to look at a couple ETH to start off, but we're not going to put in one. We're going to put in a couple just in case. Yeah, if one, that's kind of our bottom. We want to make sure that if one goes down, we want to diversify. But I'd say probably a couple ETH are going to go toward DAOs, and most of our money is going to be going toward the properties.
All right, cool. Well, look, I've held the floor long enough. I appreciate you answering my questions, and I hit reload on the website. Thanks for letting me know about that. I will pass the mic. Thanks, guys.
Hey guys, how's it going?
Hey, doing well.
I think he stepped down.
Yeah, I think I just requested again. One second.
Okay, sorry about that. My fat finger hit the
All
wrong.
right, looks like Jeremy's connecting back
Yeah,
now.
my fat finger hit the wrong button. Sorry about that.
No worries, my friend.
So to finish that
We
last
can
guy,
blame it.
the final question, we don't have a written and rigid strategy for exactly which DAOs are we're going to be getting into or what metrics need to be met by the DAO system. It's pretty fluid right now, but definitely, especially as a collective and as a community engagement project, we're open to all suggestions. We're open to all knowledge. We're open to all experience. And the fewer the fewer lessons we have to learn through mistake, the more that we can learn through the collective and through the community. Obviously, that's just going to be better for the token. So I'm certain there will come some investment that we make that doesn't, pan out exactly the way that we wanted. That's investing. That's how it works. And no matter what kind of rigid instructions that we write up to keep ourselves safe, it's still going to happen. So just to round it out before we get to the next question from Michael, that is something that is important to have. It is something that will absolutely be part of the strategy. It's not something that's currently available yet, just simply because, as Ethan was saying, we haven't made any DAO investments, and we're looking to make a couple ETH worth of DAO investments early on, and diversifying it through several. So just want to fully round out the answer to that question. Mike, over to you, Michael.
Appreciate it. So I'm kind of curious about understanding a little more in depth related to your NFTs. Who is your artist, and where do they come from? Like, who's creating the art? Like, are you guys creating a generative NFT collection? Are you guys creating a collection of one of ones? How are you going about your own personal projects, NFTs? And then are you guys also going to give people the ability to take loans against their NFTs as well?
So no, we are not going to allow people to take loans against their NFTs. If we are not going to be making any in-house regenerative NFTs, our artist, our current NFT artist, first of all, is phenomenal. He goes by Profit. Yeah, I don't know if you guys have ever heard of him or worked with him before. I bought a couple of his NFTs in the past, and then I've hired him to make a line of NFTs for one of my projects. That NFT line will be coming out soon. Those are all made individually, not through any kind of regenerative software. So just to be clear with NFT, we don't plan to have any kind of like regular release of in-house NFTs. So there are other projects that are out there that will make like homes and things like that for the metaverse, and maybe some of those will come out of our marketplace. But the NFT portion of the marketplace is really designed for our leadership and our internal people to be able to go and create stuff that they want to go through and sell, and just have a method to be able to get that sold. It's for the community who's already making NFTs, who wants to have one other outlet to find a place to sell their NFT. It's for the community who doesn't know how to make an NFT but would love to learn and love to attend a class. All of those will be one-of-one style NFTs. But then also, if you're an NFT project and your project makes those regenerative software NFTs, and you want to have your launch party and you want to have them displayed, and you want to again get all those extra eyes on the project utilizing properties that we own, we collect for that. So we don't have to actually make and sell our own line of NFTs, which we can do, but that's not necessarily part of the strategy. We don't want to come to a place where people just, feel like they have to buy an NFT from us 3 to 6 months. But it'll be a place where, you log into Decentraland for the first time and you're walking around and you see people that have all different kind of clothes on at Decentraland. You look down and see that you're naked, right? Well, one of our classes is going to be, how do you make those clothes? We call them skins. How do you make those skins? And that way they can be for sale. They can be for sale in OpenSea, and they can be for sale in Decentraland, and they can be for sale in our mall, and they can be for sale on our website. And money can be earned just from going to the class and learning how to do it, or from taking your spare time, and having some place less occupied than OpenSea. Because if you just go make an NFT right now and then you put it for sale on OpenSea, I mean, you might as well put it for sale on eBay. There's a billion things that are on there, and regardless of the number of people that are coming through, there's just too much stuff. So I hope that clarifies what the NFT portion is going to be used for, how that's going to be different than other NFT related tokens.
So, I mean, yeah, I get your point about OpenSea. However, like, regardless of what anyone says about open or broken sea, I think at the end of the day, it's the marketplace that's still widely used. I mean, the Bored Apes that have sold on OpenSea have generated more volume than what Coinbase NFT marketplace was actually able to generate since their inception. So,
no doubt.
I'm
not trashing OpenSea. I'm not trying to replace OpenSea. We're working in conjunction with OpenSea. Our properties are listed on OpenSea right now. This is just one more supplement, one more way to kind of organize it or categorize it, because it's just really easy to get lost in OpenSea. And our stuff will belong to our project members only. But we're not trying to replace OpenSea. We're not avoiding OpenSea. We want to get OpenSea traffic. Absolutely.
So I'm kind of curious about the marketplace that you're looking to create. What's the incentive to use your marketplace versus primarily OpenSea or primarily um, Looks Rare, or Gem or Genie.xyz? Kind of like walk me through why I would want to use your marketplace as opposed to these already established marketplaces. I mean, X2Y2 is another
Sure.
one.
It's
And then
again, it's not our place
in terms,
as opposed
hold
to.
on. It's a
Oh, go ahead.
hold on. It's a two-part question.
Sure.
And then also, on top of why I would want to use your marketplace, what are your fees that you're going to be taking from people when transactions are happening?
Sure. So again, it's not as opposed to, it's in conjunction with. So you listed on our marketplace along with all Rarible and OpenSea and XYZ or whatever the other one is that you called it, and we actually have a semi partnership. I don't want to call it a partnership; it's not launched yet. But I was at a cryptocurrency convention, and our booth was next to a virtual real estate marketplace that they do want to rival NFT. And we talked about partnering with them when I was there. Anyways, it's in conjunction with. So if you take your NFT and you want to get it for sale in our marketplace, we're able to track the backlinks, and essentially it's going to work like an honor system, right? You've got it for sale on OpenSea. Your OpenSea link is available on our Decentraland. We're able to see that led to a click on OpenSea, which led to a click on buy, which corresponds with when your NFT sold. We're going to want a 10% commission. So that, because you made it part of our class. If you came to our class and we minted your NFT and then we get it for sale, and it sells through OpenSea, you're getting 70%. If it sells through our marketplace, you're getting 70%. If it sells through Rarible, you're getting 70%. And the token would get the remaining 30%. Of course, if you sell more, you would earn more. So if you sell more than $1,000, you get 80%, etc. But that revenue stream, the majority of the buybacks for the token, is going to come from people who have taken our class, or used our service to mint it, and we got the contract wallet that minted the NFT, or that's made the NFT available for mint. What we would love to have as part of our growth path for the future and part of our investment to our native currency NFT marketplace is the ability for you to have your NFT collection ready to be minted. And this is something that we can do on our side. We can't quite do it for the community, so it's something we're working on. So again, you go to our class, you create your NFT collection. You've created 5 or 10 unique pieces, and people can go and see your 5 or 10 unique pieces and click mint and get the one they want, or they can get a random one depending on how they want to mint it. And that transaction's happening in native token, and we'll be able to track that and give that native token back to the creator. So that's the path that we're headed on, and that's where the NFT marketplace is going. Does that help answer your question, or am I babbling?
No, it's just a further expanding on how you guys plan to be kind of like parallel, but still reliant upon the current NFT systems that are in place. So, kind of for people that are looking to create and like mint their projects through you guys, what's really ultimately the incentive of them using you guys versus using another company to mint their NFTs? And then what's the incentive behind them getting paid in native token, the creators? Because I mean, one of the things that we all know is that in terms of sales, secondary sales are a big ordeal, especially in the art world and the ticketing and events and stuff. So in terms of the financial incentive, am I understanding correctly that their collector fee is going to be paid out in your native token? And then how do the secondary sales work for these artists in conjunction with you guys benefiting from the secondary sales?
Yeah, you're asking some really, really, really great questions, and I wish I had my NFT programmer on to answer these questions. So I'm going to do my best. Okay. And again, I'm not the coder. I don't write the code on the background. I'm going to really do my best to answer your question. If the token is getting minted in native token, it is something again that you've made as a piece of art that you've loaded into our software for minting, and it's got loaded up under our website. And then someone mints it, and they give native token to the minting, and then you receive this native token. You can choose to hold or to sell or whatever you want to do with it. Once that has happened, they can take it and resell it in ETH or in Polygon or whatever the transaction occurs in this case, ETH. So they can take it and resell it in ETH, and then you have that 2.5% or the fluctuating creator tax. The creator tax, if you come through our class and we mint the NFT, or if you've made it for sale and it's minted by the community, you didn't mint it yourself, the creator tax goes back to the project, the 2.5%, because it's going to go to the project wallet that minted, the actual NFT that generated the NFT. So that 2.5% is a revenue source into the project itself, and the resale would happen in ETH, being that we're on the ETH network. Does that help answer the question?
Yes, it does. So if let's use a metric of $100 off
Sure.
of a $100 NFT sale, how much does the actual artist get paid on the secondary sales?
0 on the secondary sales. The 2.5% that's collected on the secondary sales goes to the project. They would get 70% on the initial sale.
Okay, so in terms of
70 to 90.
So just my understanding, there's not what are you guys building for an incentive to maintain the desire for artists to work with you guys if they're not actually being able to collect secondary sales? Because
Sure.
that's one of the biggest issues, is either artists or events are not able to collect secondary sales because of black markets, and that's the whole purpose of Web3 and NFT in these current marketplaces. Like, for example, Black is Beautiful, that's a collection. It's a 1,000 piece one of one collection by Nick Art, and Ja Rule is on the project as well with him. Like, the benefit to them working with House of First is that they're going to be getting paid nicely off of the secondary sales, because they're putting the money back into the artist's pocket, and they're part of the project is, highlighting the beauty of African Americans and the minority class. So they're able to help donate funds from those secondary sales to HBCUs. So for an artist, why would an artist go through you guys if there's no incentive on the secondary sale aspect?
So let's segment this into two different markets, two different communities of what we're going to call artists. The ones where we are minting the NFT, it's getting minted on our website, where we're controlling the creator wallet. Those are going to be people who attend our class. They hold the token. They've never done it before. They want to learn. They took our time. They took our resources to create their creation. They can sell the same creation 100 times and continue to get paid over and over and over. It won't be a one of one. In that case, there would be 100 of them, it'd be one of 100, and they would make their 70 to 90% every single time that it's minted. The project, being the creator wallet, would get those 2.5%. If we were going to have a collaboration or a show of artists that of that caliber, of someone who's going to come and use it, like we said, as a consignment shop, they own the creator wallet. We're just getting commission to the consignment commission. So to segment that out into two groups, again, the people using our knowledge and our resources and our instructors and our minting and everything like that, those are our creator wallet. If you did not use any of our stuff and you're just using it as a place to sell your NFT or show off your NFT, go on that creator wallet. You do whatever you want with the 2.5% that's going through. We want our 10 to 30% for hosting you and for giving you space. And that's pretty much what we're interested in.
Okay, gotcha. All right.
Is that helpful?
Yeah, that's helpful. I guess I know that if people are going to be using your services in your education, your teachers and stuff, like I understand you guys wanting to make sure that you get your fair share of the cut, in terms of making sure that you're getting paid and your teachers and that whole ecosystem is still making its money. I guess for me, I'm probably gonna have to sit and ponder on this a little bit because just the way that it's set up is like I go to college to learn how to create art, but if I use the education that they gave me to generate art, then technically I should still be getting a cut on the secondary market. The school shouldn't be collecting 100% of my secondary creation, even though they were the ones responsible for teaching me. But
that's the whole big argument with the NCAA in football and basketball right now, and whether or not those athletes should be getting paid. Right? It's exactly the same conversation.
Yeah, I think athletes, and I think college athletes and artists that go to school to learn to create something powerful. I think that those are kind of parallels, but at the same time they're kind of apples and oranges. But I'll probably DM you offline to kind of dig a little bit deeper after I kind of marinate in this, just because with the way that the NFT market is really moving right now and the projects that are really looking to take off, and the ones that are like true builders, I'm just kind of comparing and contrasting and stuff. So I'll probably get you offline.
Yeah, absolutely. And I appreciate it. And those are just really terrific questions in depth. And actually, Taylor told me to expect great questions like that. So I feel like I was prepared.
Yeah, Michael, he's ape man is what I call him these days. Thanks, Mike, for coming in and asking all those questions. Much appreciated. At this point, I know we've asked a lot of questions. I know you guys are on a time crunch. We still want to get a couple more in. I believe Kay was going to come on with a couple questions. Kay, go ahead and come on if you want.
Hey, Kay.
I don't think Kay, we can't hear you if you are talking.
No, we can't hear you, Kay.
Yeah, we'll give her a couple more seconds. I can tell she's having some audio issues. It comes on and off on her speaker mark. In the meantime, though, if we haven't covered anything while we wait, is there anything kind of in closing that you would want to, potentially lay out for any future investors looking at your project, us, anybody?
I mean, I feel like we've done a really great job covering all the bases tonight. just want to remind everybody, we do already own 2 properties. We own a property in Sandbox. This property, I think, 180, negative 180, something like that. Ethan, you can give me the right number if I'm wrong on that. We border Binance, and Binance is buying properties in our area, so hopefully they buy us up, and if that happens, that's 50% of the token. The buyback wallet will be doxed, and it'll start at 0, so you can watch it grow and see how much ETH is in it. The collective can know exactly what they've got coming their way. Yeah, I mean, other than that, I mean, solid dev team, been around since October.
Very cool. Yeah, I'm looking forward to the to the launch Friday night. I don't have anything to do. This is going to be good. I think you did a great job navigating through this AMA, answering all the questions that were thrown at you. I was kind of upfront with you and told you might get some, non-sugar coated questions. We tend to want that raw engagement, right? Get those raw answers. That helps us really do our due diligence and provide that to our network of people whenever we do blast this out, and they can get that real feel of who they're putting their money with and the team. Because I know I speak for most of us on the DeFi Angels. It can be the best project in the entire world, but if it lacks on the team side and leadership, it's something we tend to stay away from. We like to invest into teams that are strong and can build and will always be there. So I think just from the little time that we've talked on here and what I've caught from you, I've picked up what you've put down. I think that you represent, MCU and RevLand very well, and you answered our questions. But I just added Kay back. She hopped on and hopped back on. So before we close this out, Kay, do you want to test and see if you can speak now? All right. Well,
That's
I'll
okay.
go on recording and say I will send Kay a new phone.
Let me
here
jump
soon.
in real
So it
quick
looks
and
like
just say we are launching any minute. As soon as we get off this chat, we're going to start going through, checking the wallet list, get the airdrops out. You guys join us on our Twitter Spaces where we're broadcasting our voice chat from Telegram, or you can join us directly into Telegram. Now's the time to get people into the Telegram room. Now's the time to get the hype and get the word out. We're going to be launching pretty much any minute. I'm going to go ahead and I'll hit the airdrop list, give a call over to Defiant, and let them know to go ahead and start getting all the testing done. And then we should be loading liquidity here very, very soon.
Right on, right on. Yeah, we'll definitely be there. I plan on posting your Telegram link from your DeFi Angels Twitter account, and then we'll unlock our chats. And we've been posting about it all day, so we'll be there with you. So, hey, good luck to you guys. We'll be involved, definitely watching. Some of us probably invest. I'll take a small position, give it a shot. I want to give shout out to Define as well. Congrats on those guys doing business with you, and good luck to everybody involved. And we're going to be watching, hoping for the best. All right, let's have a good night.
Appreciate it.
All right, guys. Cheers. Great AMA, by the way. Thank you so much for coming on. We'll get this recording over to you right when we get it, okay?
Awesome. Thank you so much.
All right.
Have
Cheers,
a good night,
everybody. Bye-bye.